Right, Mika. So as you rightly mentioned, both of these stocks are buzzing in trade today on the back of an Investec note, which says that, a lot of factors like favorable demographics, evolving lifestyles, plus increased aspirational travelers focus remains on an uptrend. And because of this, the Indian luggage industry as a whole is going to see an uptick in the coming years. It is initiated by on both VIP Industries as well as Safari Industries. VIP, this target price is 560 with an upside of 20% compared to closing price on Friday, and for Safari it is 2,800, which is 31% upside compared to the closing on Friday. Now they've also said that the Indian luggage market size will go to around 15,000 crores, and a lot of growth levers like the air and rail travel passenger traffic, plus increase in working lifestyle of people, the growing discretionary spends, plus shift from an unorganized sector to an organized sector is something that will augur growth to the entire luggage industry. And also, if you see in terms of the big players in this particular industry, well, VIP holds around 40% market share as of 22nd December, and Safari holds around 22% market share. Anushi, you've deep dived into Safari. Tell us more about how the company is doing.
Absolutely. So now you've given an overall scenario in a very detailed manner, but I'll just go to the individual stock performance, like that's the Safari. So coming to the financial metrics over here, if you have to look at its revenue CAGR growth over the last 2 years, some strong performance coming from this side. 48% of growth, but it's a PAT which is the standout in this scenario, about 182% of growth in PAT, and this is led by the kind of revenue performance that we've seen. Along with this, the operating margins from 8% in FY22, they've now shifted to about 18% in FY24. So quite a jump that we are seeing. Even along with that, the dividend payout has also remained consistent at a healthy levels. Again, if you have to look at the stock performance of the companies, the stock has given favorable returns to the investors, be it the 1 month, 6 months, or the 1 year pattern. The 1 year, it's the 48%. But Mahima, what really stood out for me in the note also in the Safari one was the marketing strategy that they have. So what they mentioned over here is that they are yielding 6.6 rupee sale for every 1 rupee they've invested in their advertising expenses. So on one side, while we are seeing this kind of a positive scenario for Safaris, what can we expect the same on VIP Industries? I think the inventory levels continue to be a problem in this one, right?
Absolutely. So just how good Safari is doing, VIP is a bit under pressure. Now, a couple of things. Their inventory levels are very high, which is impacting their margins and overall revenue growth as well. They've targeted to reduce their inventory by 200 crore in FY25, and they're expecting to see improvement in EBITDA margins from second half of FY25 is what the management has guided. They're also looking to reduce their debt from to around 250 crores, and they're planning to align the VIP brand towards the premium segment, which will further aid their margins. Now, in terms of profits, their profits in FY24 have declined. So, like Safari has seen a staggering 182% CAGR growth in terms of profit, VIP has seen some kind of pressure in terms of profit. Again, this is on the back of high inventory levels. In terms of stock performance as well, VIP stock has been under pressure. 1 month, it's hardly grown around 0.3% before the uptick in prices today, of course. And 1 year, it's been down around 22%. But Anushi, at the end of the day, everything comes down to valuations. Right. I mean, if you want to invest in these stocks, valuation will paint the right picture. What do the valuations say?
So I'm just looking at the VIP Industries first. You've painted out the picture about the margin pressure that is there, the inventory levels and all. And we have seeing about a 22% of drop in 1 year period itself. But despite seeing this kind of, this sort of a performance, the valuations on a trailing basis continue to remain on a staggering level. About 124x the PE ratio stands at. Now, if you have to look at FY25, now that's a whole different scenario. We are seeing this 124 more than halving down to about 45x now. So again, this is based on a positive picture as emphasized by the Investec note also that we are seeing, and the management outlook possibly that you've mentioned about. But again, VIP Industries valuations continue to remain as a watch out for going forward. Now, if you come to Safari Industries, now Safari's trailing basis, the PE has remained over 59 times. And if we go to about FY25, the forward one, as per the Bloomberg estimates, that comes down to about 52 times. But again, this is all on what is happening in the listed players. You had been talking about earlier also, there's a resurgence of some unlisted players as well.
Absolutely. And just, before I move on to the unlisted player, just on the valuation basis, like you rightly mentioned, current basis versus FY25 estimates, Safari is not going to see a lot of move, whereas VIP is seeing the P down to 45 times from 124 times. So it's quite interesting there. But, shifting focus to the unlisted space, like you mentioned, Anushi, the emergence of e-commerce have aided growth for a lot of D2C players in the unlisted space. For example, National Miles and Makobara. Both of these have reported a 45% revenue CAGR. Of course, Mika, this is on a lower base, but from the unlisted space, these are the two brands that are doing very well as compared to the listed space as well. This is the overall view of the entire luggage industry. So going forward, more the tourism grows, more the in-hand income grows, these sectors will stand to benefit.
Yes, thank you for that detailed outlook. Positive levels in terms of growth. Valuations are high, but this could subside down in FY25. That's what estimates say.